What is going on, everybody? It is Crypto Bobby. I hope you are having a great day, great night, wherever you are watching or listening in from. And the big talk of the past 24, 48 hours, going back to the last video from last week, is Tether. And what we're seeing with Tether right now, some kind of sketchy activities, some crazy market movements for a quote-unquote stable coin. So some really interesting developments that I want to cover at a high level and just talk about and kind of clear the air, at least in my opinion, on. And as we're talking about Tether, one of the things that looking at all the possibilities, thinking about everything, people might say this is FUD, people might say this is legitimate, who knows? But when I'm looking at the Tether situation, for the time being, I tweeted this out earlier today, but I want to reiterate this and kind of explain my thought process on this. So I tweeted out earlier today, I just operate under the assumption that Tether will likely spontaneously combust at some point or another in the future. And for me, with that, life is far less stressful. And really what I mean by that is, with the amount of Tether FUD that's been coming out really for years at this point in time. You had Bitfinex on Twitter, a lot of people that think Tether is basically full of hot air. I'm just operating under the assumption that Tether is at some point or another just going to go poof and going to disappear into the ether and pop off, and probably for some amount of time bring the crypto markets down with it until they kind of rebound, like they've done with Mt. Gox and a number of other big whether it's been Mt. Gox or it's been the Silk Road, things that have brought the crypto markets down for a short amount of time or for some decent amount of time, and then you'll see a rebound in the future. For me personally, the easiest thing is just to assume that Tether is going to go bust at some point in time or another. However, if maybe it turns out Tether is legit, they have a one-to-one dollar backing in the bank account, and everything ends up turning out to be fine. Maybe one day they get an audit, yada yada yada. Well, then hey, I have a pleasant surprise, and that's the way I'm viewing at it right now. So just popping over to a couple of different things. So the first thing is the block, theblockcrypto.com. They're a newer crypto site. Frank Chaparro, who is at Business Insiders over there now, Mike Dudas, and a couple other folks, Larry, who has been covering this Tether story pretty well, and they've been really on top of it. So if you're interested in some of the happenings of what's going on with this Tether stuff, I would recommend checking out the block. It's theblockcrypto.com, but they've been covering it pretty well, and they've been looking at whether or not essentially a Tether bank run is underway, and the Tether trade pairs have just absolutely gone haywire, especially in the past 24 hours. There was a massive premium for Tether to Bitcoin, as well as to some of these stable coins. And it's only gotten bigger and bigger. There has been a bit of a correction, but still pretty outrageous premium right now. So if I pop over here to Coinigy, we can see that Pax, which is Paxos, we talked about this the other day, it was about a week ago. Pax was trading at about a 3%, about like a 3% premium. Now we're seeing 8%, an 8% difference between the Pax USD trade pairing. And keep in mind, logically speaking, this makes no sense whatsoever, because if both cryptocurrencies are functioning exactly as how they should function, you have a dollar, there's supposed to be a dollar for USDT, and there's supposed to be a dollar for Paxos. People are now questioning the legitimacy of having a dollar for USDT, so they are willing to pay a premium for Paxos to get out of Paxos, essentially. And what we saw is this morning at about 1 a.m., there was a massive run where we saw the price of the Paxos to USDT trade pair actually make close to a 15% run up. Now we're still up about 3.5-4%. But incredible stuff to see, and the same can be said for True USD as well, which is another more, I would say, legitimate, or more deemed to be legitimate fiat backed stablecoin. And this is going to be pretty incredible, I think, to watch how all of this pans out, and something that I'm keeping a close eye on just for general interest. not necessarily going to dictate anything I end up doing in the market as a whole, but I am really watching both the Paxos and TUSD premiums over USDT, and how as well, not only the Paxos to USDT premiums, but also seeing what's happening with legitimate fiat exchanges, something like maybe a Coinbase Pro, or something like a Gemini, where you're actually trading US dollars versus the price of Bitcoin to USDT on something like Binance. Now, another thing to keep in mind, this is the Tether rich list, and this goes to show the wallets that have the most Tether in them. And right now, some of these crypto exchanges are very exposed to this whole Tether situation. And I'm not saying it is it is absolutely the case, but if Tether does not end up being a favorable situation for the crypto markets, some of these exchanges are highly exposed to this situation as a whole. Right now, the largest USDT balances is Binance's number one. Keep in mind, a lot of these are customer funds, but Binance has a wallet with 768 million USDT in it. The Tether treasury itself has about close to 500 million. Huobi has two separate wallets, one with 228 million in Tether. The other one has 209 million. Bittrex has 142 million, and Bitfinex is about 116 million. Then there is another Binance wallet with 61 million. So Binance over $800 million, close to $1 billion in exposure to Tether, between, I'm sure, their own funds and customer funds. Huobi also very exposed, Bittrex and Bitfinex as well. And this is going to be pretty interesting to watch pan out when I'm seeing some of this, because this is now starting to pop up all the time. OKX, which is a somewhat popular exchange, but if we pop back here, has a small bit of exposure. But OKX is now adding True USD, Circle's USD coin, the Gemini USD, and Paxos, the Paxos standard coin, which is the other one that is on Binance now as well. So I think you're going to start seeing what's going to happen is you're going to start seeing a number of these alternative stable coins start to hit these exchanges. Number one, because I think a lot of these exchanges realistically want to limit their own exposure to a potential bad situation with Tether. Number two, I think giving customers options is a much better thing than just having Tether trading. And one thing that I think is was a great statement. Somebody had said it in a Telegram group, but some people are saying, hey, maybe this Tether craziness right now is being caused by a bank run. Alternatively, somebody had said that it looks like the existence of better regulated stablecoins fundamentally disrupted the equilibrium around Tether. And I would tend to agree with that. I think that's an excellent statement. And diving into it a little bit further and kind of talking about the OKX thing and Binance and a lot of these other things with Tether is now there are alternatives. Now there are other options, and many of which people deem are more trustworthy than Tether. So it's fundamentally changing the situation around Tether, where previously Tether was like the only stable coin that a lot of people had at least faith in to peg that to $1. Now you have these other stable coins that companies like OKX or Binance and many of these other ones are listing, whether it's True USD, whether it's Circle's USDC, whether it's Gemini's GUSD or Paxos. These are all regulated, like audited stable coins. And people have a lot more trust in that and would rather keep their trust that to hold the dollar peg more than they trust Tether because of the issues of the lack of an audit, some of the issues with the Noble Bank, some of the issues with Bitfinex, a lot of different things that I think have fundamentally changed the way people are viewing Tether right now. But one of the biggest ones is the alternatives in the market. I am also looking at, too, I think what will be hopefully a good thing that will happen is many of these exchanges, like let's take Binance in particular. Binance out there has a ton of USDT trade pairs, a ton of Tether trade pairs. However, there are not many exchanges out there that have a good amount of liquidity or options when it comes to these other stablecoins. So while there is still this market craziness with Tether, I think we're still seeing that people are still using it because there is so many different trade pairs on all these websites like Bittrex and Binance. And kind of all of the above. So taking a break from the bad news, or at least the fear, uncertainty, and doubt, the news that might bring you down about your day with Tether. I actually finished recording this episode, and then like 2 minutes after I was putting this episode together and editing it, I saw this news about Fidelity coming out, launching a new crypto-focused institutional brokerage and custody business. And Fidelity is a massive, massive company. They're a $2.5 trillion asset manager. They are very well respected in the traditional financial space. I have multiple 401ks with Fidelity and have used their services before, but they are specifically launching a cryptocurrency custody and brokerage solution geared towards institutions, not geared towards retail customers. And this is going to the kind of argument of the quote unquote herd is coming, or the large institutions are coming. And a lot of people have talked about this. We've talked about this on the channel before, but some of the big things that people have always talked about as far as necessities for the cryptocurrency, or for large financial institutions or larger investors to actually take this market seriously. Number one is a more trusted custody solution. Number two being insurance. And number three, maybe more trusted exchanges. But Fidelity is taking a crack at being the most trusted custody product in the industry. And with their stance, with their kind of existing reputation in the industry, are likely a much more palatable custody solution in comparison to maybe a smaller startup like Coinbase, even though Coinbase is valued at a multi-billion-dollar valuation, or some of these other custody startups. Fidelity is a very well-respected name in the industry. So if there are institutions and the herd really is coming, Fidelity is making a bet that that is the case, and that their products are going to better serve them than the competition out there. So this is actually huge news. Fidelity is very, very well respected, like I said before. Big enough news, so much so that I decided to re-record the ending of this episode to mention this and say that I do think that this is a very positive development in the market as a whole when it comes down to institutional traders. One thing too, they announced it on stage at Bloomberg. It was Mike Novogratz and the head of Tom Jessup, the head of corporate business development for Fidelity's digital assets, or Fidelity Digital Assets is what they're calling it. So they had specifically mentioned this is not really for retail traders, but in many cases, sometimes you'll see like developments for institutionals, and that hopeful technological advancements or products might drip down to the retail traders, so that they have access to something of a similar quality or similar level of experience. So we'll have to keep an eye on that. Now, summarizing everything today, looking at Tether, looking at this Fidelity news now that it has literally just come in, I am number one when it comes down to Tether. I think that I feel fairly well prepared for what might happen. I don't think that it is necessarily a game-changing thing if Tether does go poof. I do think the market will suffer consequences in the short term, but much the way that we've seen things with Mt. Gox, much the way that we've seen things with Silk Road, where these supposed to be, massive events with deadly consequences. Eventually the market does bounce back at some point in time. And we do now have legitimate fiat-backed, audited, regulated stable coins that provide alternatives like TUSD, Circle USD, Gemini USD, Paxos, whatever it might be. So there are other alternatives, but I am absolutely keeping an eye on those premiums, whether it is for those stable coins on Binance or some of the other ones that have trade pairs, or alternatively, just seeing the premium on Coinbase Pro and on Gemini in comparison to what you see on like a Bittrex or a Binance that trades something Bitcoin to USDT as well. Again, I do think that this Fidelity news is fantastic. It's really good to see a $2.5 trillion asset manager getting into the cryptocurrency space, developing a suite of products, in this case specifically for institutional investors, but a very positive movement as more and more and more infrastructure, legitimate infrastructure, is being built out to, again, legitimize this space. So I'm very excited about that. If you enjoyed this video today, would love to hear your thoughts in the comments. Hit the subscribe button, hit the notify bell if you're listening on the podcast. Would love for you to send me a tweet about this episode, crypto_Bobby on Twitter. Thank you guys so much for your time. Looking forward to keeping you in tune on the latest in crypto world. Take it easy. Peace.